Hey traders, welcome to the fourth video of the Forex trading series. Now, for those of you that can remember going back into high school so many years ago, where you were sitting in a statistics class and you were wondering to yourself on whether or not you would ever have to use that information in your life ever again, right? I've got bad news for you. You will have to use it now. In this video, we're going to discuss moving averages, right? And in short, for those of you that can remember, um, what the moving average does is it calculates the mean of a given set of units. And in this case, depending on how many candles we choose, it's going to utilize whatever data is available. It's going to do a calculation and shoot out a mean or an average of that many candles. And then it will shoot it out to you, and then you utilize it in whatever way, shape, or form that you desire, right? And that would be the simple moving averages. It's just the general MAs that we're looking at. For our purposes, we're going to utilize what's called an exponential moving average. And I'm going to share with you a formula that is used to calculate the exponential moving average. And from this moment further, with deeper sincerity, I ask of you guys that, or I say to you guys that, my whole focus is in giving to you guys something that will allow you to be able to read in between the lines and then garner as much information as you possibly can just by looking at this. So what I'd like you guys to do is start utilizing this formula on your screen to calculate what the exponential moving average, the results which should be, and then to start mapping that on whatever platform you're using. So let's have a look at the formula itself. The answer or the data for exponential moving average, this is a formula. P stands for current price, which would be that for Euro USD currency pair. We're multiplying that by smoothing factor. Here we go, ratios, right? Loving it. Plus whatever the previous EMA data was, multiplied by 1 minus the smoothing factor, right? And so, and then within the smoothing factor formula, n stands for the number of time periods. So in this case, if we wanted to do an EMA 50 calculation, you'd put 50 in there in place of the n, right? So you guys with me so far? And I'd like you guys, if you're trading on a 15-minute time frame, I want you to go ahead and calculate that for every 15 minutes that, or every candle that opens up, right? If you're on an hour time frame, then go and calculate that for every hour that you're trading, right? So with me so far? Okay, so you're probably swearing at me. That's what the formula is, right? That's what I wanted you guys to become aware of what's going on in the background calculating an exponential moving average. Lucky for you, our platforms, especially, well, it doesn't matter what you're using, our platforms does the calculation for us on the fly. Now, if I click on this and transform this from a simple, well, it is a simple moving average right now. I'm going to move it to exponential, and I want you to have a look to see what's going on with this. I want you to have a look to see at the line itself, right? So have a look to see what happens to the line when I'm clicking on it. Notice how it's no longer so smooth. These rough edges on the end of it. The difference between an exponential moving average and a simple moving average is such. A simple moving average will give you a mean or a calculation of all of the 50 candles, in this case for the 50 SMA or 50 MA. An exponential moving average will do exactly the same thing, but only there's going to be a slight change in its calculation. It will actually give more weight to the more recent data or more recent candles as opposed to the back end candles. And why that is of benefit to us is that for those of us that are trading on the lower time frames, we'd like to utilize the most recent data to give us price fluctuations or movements happening sooner than later. We don't want to wait for a new line of 50 candles before we actually get a more appropriate average for our benefits, right? As you go up in time frame, it doesn't really matter so much as to whether the moving averages are simple or exponential. But when you do come down into the lower time frames and you want to utilize more of the recent data, you'll be more sure to use the exponential moving average for that benefit. Okay, and in short, that's all it is. That's all we really need to know in regards to the moving averages. So anytime you see where it says, say, EMA 200, basically it's an exponential moving average. It's taking into calculation data from the previous 200 candles, and the exponential factor just means that it's going to take into account more of the most recent data and less of the previous data. Okay, and that's all there is to it. That's all you need to know about it. Okay.